Welcome to the IRS Debt and Audit Podcast with Brian Loughrin.
Hey everyone, welcome back to an all-new episode of the IRS Debt and Audit Podcast with Brian Loughrin. I am your host, Mike Leon. Brian here is a seasoned tax attorney based out in Tampa, Florida, and the founder of Tampa Tax Relief. And for more than 25 years, he's been helping individuals and business owners all across the country resolve serious IRS problems, from audits to tax debts to cases in the U.S. tax court. In today's episode, we're going to be discussing what happens when you're facing IRS debt because of something your spouse or former spouse did. Oh, I'm sure people love that. We'll talk about how innocent spouse relief works, who qualifies, and what you can do to protect yourself. Brian, it's good to see you. Apropos, as tax season is right around the corner for a lot of folks, let's ask you here at a high level, what the heck is innocent spouse relief, and why does the IRS allow it?
Thanks, Mike. Innocent spouse relief is really just what it sounds like. You have a spouse who is or believes to be innocent of the tax debt. And the basis for that is an objective standard of not knowing about the tax liability, but really more importantly, not knowing that that tax liability could have been generated. And by that, what I mean is it's not enough to just say, I didn't know about the tax bill. My husband or my wife is the one that pays all the bills. I stayed home with the kids, or I have my own thing and so forth. I just had no idea. I'm like a lot of spouses. One of them will come up, and it's usually the guy will come up and say, here, sign this, sign that's insurance or something for the kids for school or whatever. Same thing with taxes. And, the IRS understands that that happens in busy lives. But the objective standard isn't whether or not that innocent spouse knew about the tax liability. The standard is really whether or not that innocent spouse knew or should have known about the type of income that it could have generated the tax liability. And so to drill down on that just a little bit, I use what I call simple examples to illustrate to people when I first talk to them what may or may not qualify for innocent spouse relief. And a simple example is this: you have the husband and wife, and let's face it, 95% of the time it's the guy is the non-innocent spouse. That's just the way it is. The guy's out making money, earning money, and so forth. And the lifestyle that the wife is experiencing is, it's not necessarily high or low. It's a lifestyle that they're aware of. And as it turns out, the husband was generating an income far in excess of what the wife realized. And in addition to the fact the husband's the one always paying the bills and handling all the type of paperwork and so forth, when they split up, she finds out all this money is owed. You have a scenario where I had a case years ago where a guy was on the road a lot. He was some type of sales or something, and he was making a lot of money. I think the guy was making $400,000 or $500,000 a year, and they were living in a not very nice place. The wife was driving an old car, was 8 years old. She was getting all her clothes at Kmart, things like that. And the guy was secreting or hiding a lot of this income from her because when he was on the road, he was using it for things that, let's just say, don't go to strengthen a marriage. We'll leave it at that. And so when they split up, she had no idea he was generating that type of income. And ultimately, she qualified for innocent spouse. The flip side is you have a husband and wife, and they're living in, say, a very nice home. The wife is driving a new or brand new car, a luxury type vehicle. They're taking trips around the country, around the world, jewelry. The kids are in private schools and so forth. They split up. The wife finds out that there's a large tax debt, which she did not know about until they split up. And the IRS comes back and says, well, you realize your husband was earning a tremendous amount of income. So it stands to reason that he was generating enough of an income that could lead to a large tax liability. So in that particular instance, getting innocent spouse is much more difficult because the IRS's position is the innocent spouse either knew or should have known that that type of tax liability was being generated. Whether or not it was actually paid when it became due, obviously, was a whole nother matter.
Yeah. I love the way you phrased that about that example there, Brian. So good job there. But let me ask you on the couples front, because I mentioned that it is tax season as we're recording this. So couples out there are filing joint tax returns. What are some errors, some pitfalls, unpaid taxes that could maybe come back to haunt them or haunt the spouse later on, I should say?
Really, it's the not knowing. and it's just not being aware. And again, let's face it, many couples, I wouldn't say most necessarily, but many couples, one or the other is the one that really handles all the paperwork, if you will, for the household, insurance, taxes, just any credit card payments, car payments, all those kinds of things. It's usually the way it works because it's just a simpler form that works for people. The thing is, anybody can obtain their own IRS information at irs.gov. Just go to the website, you create an account, much like when you get a credit card in the mail. It says, do you want to pay your credit card online or have access to it online? You go in and create an account. Only with irs.gov, there's about 10 steps to it. It's a little more complicated, but once you're in, you're in. And you can just put in your name and social and go year by year to find out if it's showing any type of liability or whether or not showing a return is filed or unfiled, etc. So I would just caution people, if you have any inclination or any suspicion that you might be in a situation where you have a large tax liability that you kind of think maybe your spouse isn't telling you about, just create your own account at irs.gov and you can see it for yourself. Although I will say this, it does take a little bit of time because the IRS website has many, many pages to it. So I jokingly tell people, just do it at night when you're sitting around watching Seinfeld, grab a cup of coffee and just take your time going through it, but definitely set up your own account.
Nothing better than a Seinfeld rerun on
Yeah.
TBS, Brian. Well said. So let me ask you, because I mentioned innocent spouse relief at the beginning of, and that's what this episode is about. But can we kind of drill a little bit more into like how the IRS actually decides whether or not it's fair to hold someone responsible for their spouse's debt? You gave a little bit of the answer, but like, can you kind of drill into details? Like, how do they actually decide that?
Well, you have to fill out a form. And with the IRS, of course, everything is based upon some type of form that they want you to start all types of actions with, whether it's filing a tax return or claiming innocent spouse or really any other type of situation with the IRS. But you fill out the particular form and you submit it to the IRS. And they will then, in turn, reach out to the other spouse, the non innocent spouse, if you will, for their opportunity to respond. Now, one thing I didn't really mention at the beginning, and that is this: you can claim innocent spouse when you're still married, but I don't really know of any case, at least I've not come across any case where a couple's still married and together. Okay, now people are married and they're split up, but where they're together and one of them's claiming innocent spouse, it's usually where they've split up, either formally divorced, in process of a divorce, or if they're still legally married, they're only legally married on paper. But nevertheless, you fill out that form, you submit it with your information. The IRS then reaches out to the non-innocent spouses and give them an opportunity to respond. And then, of course, based upon their response, they reach back to you and so forth. And that really starts the process. But again, they do give the non-innocent spouse an opportunity to respond.
Yeah.
Going further on that, once they do respond or don't respond, the IRS will come back. And one of the big things that they will do is they will look at the income in that household, who made the income. Oftentimes in innocent spouse cases, you have one person, again, usually the guy, making either all of the income or a great deal of the income, and then the innocent spouse making either none or some of it. If they're earning some of the income, the IRS, if they do grant innocent spouse, will almost always apportion that percentage to the innocent spouse as they are still liable. So, for instance, if 80% of the income was the guy and 20% the woman, if they give that woman innocent spouse relief, she'll get 80% relief, not the full 100, because 20% of the income was hers.
All right, I get the math there. But let me ask you, let's fast forward a little bit. Let's say the claim is approved. What happens to the debt? Does it wipe it out completely or only the portion that's tied to the spouse?
It's just the portion that, well, it could be completely if 100% of the income was to the non-innocent spouse, to the guy. If whatever percentage is apportioned back to the innocent spouse, that part they're still liable for. And so it does a quick breakdown. And so ultimately the IRS will send a notice saying, okay, we've made the adjustment. Here's the actual numbers, and you're still liable or responsible for that portion.
Are there deadlines? I'm assuming there are, requesting this, but also what happens if someone waits too long?
The IRS has a general rule of a 10-year window for collections, meaning from the time that the tax return processes if there's a liability or a debt, that starts a 10-year clock. Now, a lot of people get excited. They hear 10 years, they do the math, and they say, hey, it's 10 years is run or what have you. There are certain things that can freeze, or what they say toll, that running of the statute of limitations. But basically, with innocent spouse, it's really treated in the same way that any other liability is. If it hasn't expired due to the statute of limitations, if it hasn't been paid either voluntarily or through refunds that have been intercepted or through some other form of discharge like a bankruptcy, the timeline to really claim innocent spouse is for so long as there is a valid liability. So it doesn't have a separate time frame necessarily.
Brian, what have you seen in your experience when people try to kind of handle this on their own? And has it hurt their case without seeking professional help like of yours?
Well, I mean, I'm biased. Obviously, I'm going to say call me instead of trying it out on your own. But the thing is this: I think the biggest thing that slows people down or really prevents success is when the innocent spouse approaches it, and of course, the form says, "Please explain your situation." And instead of it really just explaining the situation in a way that the IRS wants to work with it, they kind of go the long form, the multi-page or almost a novel length story of all the transgressions that they suffered at the hands of some slug husband who, was again using the money in ways that don't foster a positive relationship. We'll leave it at that. You put to your imagination. So I always tell my clients, look, write out what you want to write out. We'll take a look at it. But I really want to keep it kind of tight. I don't want it 20, 30 pages of backstory. I want to stay kind of tight to the time frames and what your situation was and what you were going through at that time. Not so much emotionally, but in terms of your lifestyle. What were your circumstances? Because the IRS will really do a deep dive into that, because again, it's an objective standard. If you're living a very nice lifestyle and you're driving new cars and jewelry and trips and things like that, or even if you're not having a great deal of income, but your living standard is such that nobody could think that you didn't know that your husband was making $200,000 or $500,000 a year. That's really what the IRS is going to look at. But I always tell people, just stay tight at first, because as oftentimes with the IRS, they're always going to come back and say, hey, we need additional information or we need clarification. They're never going to make a decision just on the initial front end application.
Brian, can I just go back to something you said before, and can you kind of clarify? Does the type of relief applies after a divorce or during a separation? Like, how does that window work?
The IRS isn't going to really go into whether or not you're legally married, divorced, and process of divorce, legal separation, kind of not together, all that kind of stuff. They're really not going to look at that. Now, that may play a role in part on their decision in terms of if a couple's still legally married and living together and they continue to do so, the IRS may scratch their head a little bit and say, well, wait a minute, what's going on? Are you really an innocent spouse? It seems like maybe you're just trying to get out of your side of the debt, so to speak. But the IRS isn't going to do a deep dive into that. I always tell people it's important, if you have the legal divorce decree and property settlements and things like that, I want to take a look at that, because we may include that in the application for innocent spouse. But they're not really going to necessarily take a good look at what your legal status is at that point.
No, that's good to know for the audience out there. And as we kind of land the plane here on the episode, so someone listening to this right now, they're a little worried after hearing you talk about being forced to pay their ex's tax debt. Like, what's the first step you would advise them to take today?
Well, give a call to our office. We'll talk to you about the situation. Certainly, you're going to want to have an idea of what balances you're dealing with. And again, if you go to irs.gov and create an account, just like when you get a credit card, you can pull your own transcripts and documents, and you can find out what the IRS is saying you owe, whether or not you believe you're liable for it or not. And one other thing I did want to add, Mike, and something that I do get questions on, is something called injured spouse. And a lot of times people mix that up with innocent spouse. And injured spouse is a little bit of a hybrid. It's usually couples coming into a marriage. One of them brings debt into the marriage from previous tax years that they weren't filing together, because obviously they just got married or been married a short time. And then the other spouse doesn't have tax debt. And they go to file their tax return, as a joint return, and usually the guy who brought the debt in, he might owe who knows how much. The wife or the innocent person is due for a refund, or at least they paid enough taxes, and the IRS intercepts the refund, and all of a sudden the person's saying, well, where's the refund? We filed joint, but we should be getting back X amount of money, only to find out that they put it to the other spouse's previous tax debt from before they were married. And at that point, you can make a claim for injured spouse for that particular year, so that the person who did not bring debt into the marriage and would have had a refund will get that refund back. And that is something that we do as well. But again, that's usually kind of a one-time deal or one and done type situation, because once they're made aware of it, oftentimes couples will file marriage separate. But nevertheless, that is something we do as well. But I just tell people, give a call to our office. We'll be happy to talk to you. We provide a free consultation, and we'll give it to you straight. If we think that there's a good chance of obtaining injured spouse or innocent spouse or injured spouse, we'll let you know. And if not, I tell people the same thing. I say, listen, under the circumstances, I don't see absolutely any way you're going to be granted that. And if that's the case, I can talk to them about other alternatives to deal with the debt.
Yeah. Brian, it's great info as always. Thank you, my friend. Appreciate it.
And thank you, Mike.
And thank you for listening to this installment of the IRS Debt and Audit Podcast. Look, if you believe you may qualify for this innocent spouse relief that Brian's been talking about, don't sit around and wait and hope the IRS is going to let it go away, because they're not, folks. Reach out to Brian and the team by visiting tampataxrelief.com so you can schedule a free consultation and connect with Brian and the team, or you can call 813-694-7177. Do me one more favor before you go. Hit like, hit subscribe, leave a review, comment, share the episode with someone who needs to hear it. I'm Mike Leon. We'll see everybody next time.
Thanks for watching. Be sure to hit that like and subscribe button and leave us a review in the comments.